video, I am going to go over the mini budget a little bit. I'm not an economist, so right off the bat, I'm going to say I'm not an economist. I'm just going to share with you some of my views. I do not want to be an economist. I don't claim to be one, and I do never want to be an economist. But I feel it's very important, if you're an investor, even if you're not an investor, you should have a financial education. And part of having your financial education is having an understanding of what's going on in the wider economic world and global and macro and microeconomic circumstances. So keeping an eye on this is very, very important. And then making sure you make solid fundamental decisions off the back of that, depending on where you are in your journey as well. I talk a lot about this, making sure you make these decisions based around where you are. I know a lot of people are talking about there's opportunity here, there's opportunity there. There's tons of opportunity. Whenever there's change, there's massive amounts of opportunity. There is tons of opportunity out there at the moment. I'm super excited, but you've got to pick the right level of opportunity for you, where you are in your journey. So we're going to discuss a little bit about that at the end of the video. This is my first live on YouTube as well, so please hit the like button on there. Really helps some algorithms and my ego. I'm multi-streaming across a few lives, so look, the lives where you won't get the recording of this, go over to my YouTube if you want to watch back on any of this, because the recording is going to be on my YouTube. It's the first time I've actually recorded on there. I'm not sure how it's going to go, a bit of a test, but let's see how that goes. But let's talk about the mini budget. Let's talk about what got announced. Let's talk about some of the possible effects. As I said, I'm not an economist, I'm not a financial advisor, I'm just sharing my views. I'll share what I'm doing and how I see this and how I see the opportunity within this. Whenever there is change, there's massive amounts of opportunity. What a lot of people know is we got a message from one of our investors yesterday we're buying property for, and he was like, oh look, have I missed the boat on this property investing? The thing is, we've had an artificially low interest rate for the last 10 years. That's not been realistic. It's just been artificially low. So the reality is, you want to be doing your numbers based on fundamentals, not based on artificially low interest rates. And I'll share a little bit of that at the end of this video of what to do with that. But let's go over this budget first of all. What got announced on Friday, this mini budget, which is pretty much more like a full-on budget. It's Liz Truss first budget. It is Kwasi Kwarteng, if I said that correctly. It's his first round at delivering this. Kwasi Kwarteng has got no, I believe, don't quote me if I'm right, somebody put in the comments if I'm correct on this, yes or no. I believe Kwasi Kwarteng has got no economic experience in the past. So he's just somebody who was in cabinet, and Liz Truss has gone, okay, like, for my opinion, this is what it seems like has happened. I'd like you stand in for this role. But apparently he's got no financial background or no financial pedigree to be making these decisions. But let's see how it pans out. Their general stance towards this is let's stimulate the economy, let's cut taxes, let's stimulate from the bottom up. And I like that policy to a degree, but at the moment, look, one of the reasons we're in economic troubles at the moment is the amount of quantitative easing that's gone into the market, and the amount of money and liquidity. And the cuts that we're putting in at the moment is more fiscal policies that's gonna stimulate the market in the form of quantitative easing. Money's got to be produced for all these cuts, so we add more money to the market. So I don't know, it just seems like it's going to be a hard decision for anybody, and I don't claim that I've got the answers for this, but it's a hard decision all round. But I do like the idea of trying to have bottom-up stimulation and encouragement. But let's see what's in there. Mini budget, what was announced? So income tax, base rate cut by 1p from 290p from April 2023. We'll go over all these a little bit more in a minute. I'm just going to announce what was announced. We had national insurance, 1.25% raise. We've got stamp duty, no stamp duty on first up to £250,000. So that's raised from £125,000 up to £250,000. First time buyers, no stamp duty for £425,000, and that's a raise up from £300,000. Bankers bonus, that's been scrapped, and corporation tax has also been scrapped. And we've also had a cut on high rate taxpayers. So the 45% taxpayers, their rate has been reduced to 40%. This is one that's been very, very controversial, and I'll share my views on these in a minute. Well, let me start with that last one because it's quite controversial. See, I think we overtax in the UK. I like the policies around the world, and the countries you see that have low taxation systems really encourage grand up in investment. They really encourage people to keep their money in that country. What happens when you overtax people is people look for ways to get around that and take their money away from the UK. So I'm not a fan of 45% tax for anybody, or 40%. I think it's too high. But in all, I have to humble myself with this, even though I think it's too high and I think it needs to be addressed. Do I think this was the time to address that? No. Like, look, we've got a cost of living crisis. You can watch my videos on YouTube on cost of living crisis, but we've got a cost of living crisis, I think, and we've got a massive deficit within the government, and the government's got to print more money. So I think that money would have been better spent and better directed somewhere else at the moment, because obviously these people paying 45% tax have been used to paying that for quite a while, and then middle class. These are not businesses, so I get that Liz Truss wants to stimulate it and encourage business to earn money, but for me, that could have gone towards pubs, small businesses. Look, small businesses like pubs and restaurants, even with the energy cap, it's going to massively increase their overheads. And some of these, like I was reading, like some pubs might be paying 15 grand a year on their energy, and it was going to jump up to like 40 grand a year. And even with the caps, it's probably going to jump up another maybe 10 grand a year on their energy when they're already a struggling business. So places like this support, rather than middle class people. This is not business. These, like this end of the 45% tax bracket. I said I'm not a fan of this, by the way, but I just do not think now was the timing to be addressing that. I think there's bigger issues you could address. Similar again, I believe they could have addressed VAT much more on this as well. So VAT for small businesses, so especially service-based businesses like restaurants, people that have just got a service, like just a service, not a goods base. So when you've got goods, if you're a builder, you pass that VAT on and you collect it back. So it don't really affect you. It's just collecting that VAT. But when you've got a business, it's just a service-based business. So like if you're a deal sourcer in the property space, once you hit that VAT threshold, you've got to pay 20% extra. And often you can't factor that into your prices, especially when the economy is low and people are worried about spending. It's hard to pass that extra 20% on. So then you have to margin it out from what you're doing. So theoretically, you're getting your 19% corporation tax and then 20% tax on top of that 19%, which is really damaging for a lot of small businesses. You get a lot of businesses that go, do you know what? In my sourcing business, that was one of the things, that was one of the criteria. We'll source enough business until we get to the VAT threshold, and then we'll stop that year. And you get loads of businesses that just stay under that threshold and don't want to grow because they don't want the hassle. VAT is hassle in itself. It's just a much more of administrationary cost within your business because you have to pay your accountant to do that correctly and get it all done correctly, and it's an extra 20%. And if you can't pass it on and claim that back, it's just 20% extra going to the government. So I think they could have looked at VAT before they looked at reducing 45% tax band. But that said, as I said, I'm not an economist. I'm not a fan of the 45% tax, but I just don't think now was the right timing with that. Corporation tax, let's go on to these ones. We're talking about tax. Let's come back to the corporation tax. Corporation tax was going to rise to 25% for businesses earning above £250,000. So again, I think that's a good move to do. I think you should have low taxation. It will encourage more people to pay tax and keep their money in here. The cost it costs for these people to get their money offshore and into these tax loopholes, it costs money to do that. So if the taxation was lower, it just encouraged people. The people just pay the tax here, So I'm a fan of that. But again, at this point, I think the small businesses need support. So this is just supporting bigger businesses earning £250,000 or more. Good move, I think. But again, this is not reducing this, by the way. This is taking away what Rishi put it in place. But again, this is going to need funding. So these cuts accounting for billions and billions of pounds, which again is going to put onto the bottom line of the deficit of the government. So bankers' bonuses scrapped. Again, another real controversial one. You've got to encourage the best talent to stay in the UK without question of a doubt. But scrapping them at this point, at the moment, again, bankers are used to it. We've not got an exodus of banks as far as I know. I don't know if anybody knows of an exodus of bankers. Please put it in the comments. But as far as I know, we've not got a major exodus of bankers. So scrapping that right now is that the right timing? I think what we need to be doing is stimulating small businesses. Small businesses are going to come under pressure with this energy shift, with the petrol prices. They're going to come under pressure with the wages that people are going to be wanting more wages. So I just think this is wrong directed. Again, I'm not against people earning bonuses. I'm not against people earning money whatsoever. But that said, It's just timings. Obviously, you can't correct everything at the right time, and for me, I just feel this is the wrong time. And let me know in the comments if you agree. What's your thoughts on these subjects? Again, I feel another thing they could have been doing instead of giving an energy cap. I feel, look, the energy companies are earning record profits. So why are they not pushing into tax these energy companies? Like BP, I believe, paid something like 4% tax. I'm not against that, by the way. When people slaughter Amazon and people uh, slaughter slaughter like Apple. Apple has a massive impact on the economy. All the apps and people do business through apps is massive. You take away Apple, you take away a load of income and economy stuff. You take away Amazon, has a massive impact on the economy and people who do business on there, and people get a massive utility from that. But the petrol companies earning record high amount, and again, it's a real risk business. You know, like there's a monopolization within like the energy sectors and the petrol sectors where it's just not like, okay, somebody will come in and run my business. Businesses like your big tech businesses go bust all the time, so you have to make big margins. You don't see many BPs going bust, do you? You know, so yeah, I feel there could be more pressure on these big companies on that side of things. But again, just my opinion. Love to hear your opinion. Stick it in the comments what you think. But again, scrapping the banker's bonus, I think they could have pushed that towards energy companies a little bit more instead. Let's look at stamp duty. What effects will this have on the market? So we all went through Greece, and it put the market on. It was already pretty strong, the market, the property market. We had a low supply of properties. We had low borrowing. So when you've got low supply of properties, you've got high supply of lending, pretty easy lending, and at a low rate, this is going to definitely cause house prices to push up. And we never replenished the stockpiles since 2019. We still haven't replenished those, so we've had an upward trajectory on property. Does property need to be more stimulated at the moment? I don't think so. Similar again, I think this budget could have gone somewhere else. The property market, I don't believe, was going to massively crash. I think this could, like, instead of stimulating like the stamp duty, my views is they could have stimulated like just in the bottom line of people's earnings a little bit more. They could, like, they've done the national insurance and they've done the income tax saving, but I think that would have been better in people's pockets directly, because I think stamp duty should be abolished completely, by the way. I think that's just a government gangster tax. Like, there's certain taxes is just like gangsters walking in and shaking you down and give you like extortion where they're just asking for something. You're buying a house where the government's had nothing to do with building, nothing to do with that house. They're just saying for the right to buy the house, give us some money just because we can. So that's just bully tax for me. I think should be scrapped completely. But again, at this precise time, no, I think that money could have been fed into the economy in different places where people would feel that a little bit more. The property market cooling, I don't think that would be a terrible thing at the moment anyway. I think if people's got more money in their pocket, I think the interest rate rising, combating this, is going to like damage the market much more than, like, it's not going to counter-react the interest rates rising and affordabilities of mortgage, you know. So support around that, or people having more money in their pocket so they can pay these interest rate rises on their mortgages, I think would have been placed better myself personally. As I said, look, I am a fan of them trying to stimulate the market, but yeah, I'm not feeling this one, to be fair. I'd love to hear your comments if you think they've got this right, where you think they're going with this. But let's go on to the national insurance. And let's go on to national insurance and income tax. There's a great little chart on Huffington. Is it Huffington Post? Where they show you, no, it's not the Huffington Post, I think it's Sky. So if you go onto Sky, the headline for this article is tax change calculator, see how much you will save. So they're saying on here, millions of workers are paying less tax following the Chancellor's mini budget. The basic rate of income tax to be cut by 1 penny from 20% to 19% and introduced in April 2023, 1 year earlier than planned. So this already got put into the budget from Rishi, but it's just been brought forward a year early. So this is in addition to reversal of the 1.25% hike in national insurances. This is good for businesses as well. I think things like this are good because it's going to help businesses save when they're paying the national insurance, and employees at the same level. And I think some of the other, like the 45% down to 40%, this could have gone into here this would have helped bottom line people much more. But this tells you where it's at. This is really, really controversial as well. I think the government can get them, if this don't turn out right, like they're just definitely going to lose their seat, Conservative, because the backlash from this is going to be ginormous. And I kind of get it. As I said, I'm pro earning. I'm pro not overtaxing people, but again, the timing for this, when the government's in such a massive deficit and we're in such a headwind economic times, I'm not sure reducing the 40, because I said, then people earning 45%, they're not economic drivers. What you want what for me, it should be based at businesses, the people that are employing people. Look, Apple, Google, Meta, some big companies are already starting to do layoffs. There's already hiring freeze across the big techs. The big techs have been supporting the stock market, especially for years, and that's been where the major growth's been. And they're doing layoffs. So this could be that ripple out that we see. So in that middle end, where's this somebody earning 45 grand a year? Look, the saving here is going to say, look, if you're on 100 grand a year, you're going to save 1,400 quid. So that 1,400 quid savings margin down to like that's here or there if you're on 100 grand a year already anyway, and you're not people on 100 grand a year. This is not the business owners. This is largely just employees, you know, like middle class employees, and saving them 1,400 quid a year when potentially you could have push that down into the lower end where the people are going to struggle even more. Look, the cost of living crisis is not going to hit people nowhere near the same when they're on 100k plus. I'm not against people earning 100k. I think people should be rewarded for earning good money, but the reality is it's not going to hit them the same. So the biggest savers with this national insurance and tax is going to hit. And again, there's a nice little chart on, let's see if I can show you this. There's a nice chart, this is back to front obviously, but there's a nice chart on Sky showing this. So 100k, you're going to save £1,470. If you're on 60k, you're going to save £842. If you're on 40k, you're going to save £617. If you're on 30k, you're going to save £392, and if you're on 20k, you're going to save £167. As I said, I think if that top level one that was filtered down to the lower level ones, I think it would be much more beneficial for the economy myself. But again, I'm not an economist. I'm not against people earning good money. I think 45% tax is ridiculous. I don't think it should be a thing, but I just do not think the timing on addressing that is right now. My view, as I said, put your views in the comments. Love to hear those. And again, people with above average incomes stand to gain the most relative to their earnings. Again, so when you look at the chart, there's a chart. Let me see if I can find this chart. There's a chart that, what's it called? UK salary pyramid. I think if you Google UK salary pyramid, and you'll see the percentage of what people earn. So let's see if I can get this up and show you this quickly. So here it is. So, can I get a bigger version of that? So only 5% of people earn above 76k a year. So it's a small percentage. Let's see if I can make this bigger and show you this. Can I do that? No, I can't. How do we do this? Well, anyway, look, let's show you this here. So over here, you can see this UK salary chart, and only 5, is it, what did I say there? 5% earn above 76k, only 1% earn above 175k, 10% earn above 54k, 50% is 50k is 13%, 25% is 37k, 30k is 37%, and 50k of the economy that pays HMRC and employees earn 24k. So when you bounce back to that tax chart and you see the percentage of people that are benefiting from this, it's not really hitting the larger portion of people. So yeah, I think that's this disproportionary. I don't even know if that's a correct word, but it's been proportioned incorrectly is probably a better way for me to spit that out. So look, what effects is this going to have? And how this going to work? Let's have a look at my notes. So already the pound has dipped. So obviously the global economic powers to be have responded to this budget thinking, wow, this is not good. The pound has dipped. The pound has fallen against the dollar to the lowest it has been since 1985, when Margaret Thatcher was in power, and that was Liz Truss's idol, by the way. So that's fallen really, really low. What effects will this have on property and the market in general? That is dangerous for the UK to have a low pound and a low trading, especially again as we trade in dollars. We're buying gas and we're importing in dollars, so all the importation, that's going to put more inflationary pressures going upwards if the pound is weaker. What it can potentially do, especially in the property market, a lot of people are going to be looking to put their money into safe havens at the moment. So money can potentially come into the UK property market because the pound's cheap, so they can buy properties at a discount anyway. So this could have a bit of an effect on there, or people might be scared to get into the UK because they might think we're going to massively tank. This is a massive risk by the government, what they've done with this policy, and the pound reacting in that way is a massive sign of that. FTSE was down, as far as I know. I can't see on this chart here. Is this a FTSE? But yeah, the pound has fallen way faster than it has done in a long time. So going to be interesting times ahead. Cash flow is going to be king for these environments. What I'm doing at the moment is I'm fixing all my long-term fixes for 5 years. Somebody said to me, but what when you get to the end of the 5 years, could we be in a depression? Look, you look at the 1929 depression. Last time we hit zero interest rates was around that time, and we had a depression and downturn in the economy for about a decade, and we get a lost decade. It was Ray Dalio talks about a lost decade, and we could hit that. Of course we could, but the thing is, we don't know the responses of the government, how they're going to stimulate it, how they're going to respond it. But the reality is, this could happen. We're at the end of a long-term debt cycle, so this could happen. So what happens in 5 years' time? We're still in this mess. But what you want to do to protect that is make sure you put money aside. Don't live to your complete means. Like if you've got, like one of the guys yesterday, we're buying a property and he's gone, oh, have I missed the boat? And my interest rate's 4.8%. Have I missed the boat? No, the interest rate at 2.5% was artificially low. That's not a long-term average. So people thinking that they're investors based on artificially low interest rates, like you've got to have a look at yourself again. And the way you survive, like any market will have circles and turns. And the thing is, sometimes we have once in a lifetime turns in their markets, and we'll live through some real big prosperity. Never before has the markets been stimulated and gone up so much as they have since the 1950s up until now. We've been the biggest bull run ever in history. So we're in the biggest debt bubble ever in history. So we've got record-breaking things, and we've got massive disruption to the world with tech and the world being more shrunken, you know. So there's massive changes coming up. Cash flow is going to be king. For me, people are going to always need family homes. In the UK, we haven't got enough homes, but the more riskier stuff is riskier. I'm doing a workshop on Thursday, bit.ly/invest remotely, where I'll go through an all-weather portfolio, how you build in. If you're worried that in 5 years' time the interest rate's going to go higher again, make sure you save. Don't just go on holidays with these income. Make sure you protect your wealth, you know, because the people that are left standing at the end of this, if it takes 2 years, 5 years, 10 years, whoever's standing at the end of this will come out really strong, you know. So and whoever sits on the edges and the sidelines is not, but the people that dip in and take too much risk relevant to where you are in your journey. So there's opportunity across everything, all the board, all the property investment strategies out there. There's opportunity in there, but only if you can protect that downside. Only if you've got a solid enough portfolio. If interest rates in 5 years' time are ridiculously high, you've got the buffer in there. You've got enough reserves in there. You've got enough cash flow from other areas. You've got to build out this all-weather portfolio. Ray Dalio talks about this in the stock market. You talk about growth stocks and you talk about value stocks. Value stocks are the ones that don't grow and send you to the moon, but they give you steady stability within what you're doing. So when the growth and more exciting stuff gets vulnerable and dips, you've got the protection within that. And I've done the same methodology. I've modeled that in property. I've done the same methodology. I'll be sharing you how you build this in my workshop, and you just got to be patient depending where you are. Don't get seduced by these really exciting stuff if you've not got the downside protection to protect that. Look, if you've got a solid portfolio, you've fixed a lot of that on long-term fixes, you've got a low loan to value on that because you've owned it for a while, capital appreciation's really pushed on, then you can go for some of the bigger stuff because you've got the cushion and stability within what you've got already. But you're starting out and going to do massively risky stuff and your income does not cover that risk, then that's a bit of a risk too far, in my opinion. Depending who you are, depends what you've got to lose. We're all individual. When I coach people, I ask you a series of strategic questions to find out where you are in your journey. Then we figure out, right, you've got to push yourself out of your comfort zone. You've got to take some level level of risk, but let's figure out what level of risk you should be taking relevant to you, with the courage you've got, the conviction you've got, the skill you've got, the money you've got, the network you've got. It all blends to this. Like, and you get these people, to be fair, I'm a course seller, so I'm not criticizing anybody who sells courses, but you get these people that just sell dreams. Come and do this. You can be financially free. More millionaires are made in a recession than ever time. True, by the way, but you don't hear about the people that go bust chasing dreams. You've got to protect the downside and do this strategically. I will teach you how to do this on my workshop on Thursday. The link to that is bit.ly/invest remotely. Listen, my why is to live on my terms, and my mission is to help as many people live on their terms as possible, using property as a vehicle to do that. So please share this out if you found this valuable. Please tag people in. Please let people know about my workshop on Thursday. It's bit.ly/invest remotely. Remember, if you don't evolve your ideas, you never live on your own terms. So evolve your ideas, live on your own terms. Have an amazing day.